Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. Well, a little bit of a turnaround move, supporting off the 23% on the ES, and significant dip of that orange, and that was a critical move because it also created the crossover of green above red and steel above cyan. So that was enough to really start to create the push, and you can see the extension of that. Red is leading this one, so a pivot down, particularly if magenta stays under the 25 range, would definitely be a false breakout attempt. So that would be definitely something to keep an eye on from there. And we have this dip below the red line, so that will get revisited. Just a question of waiting for the actual turnaround. So we'll see that on the 50K, 5K before it happens. From an ES to the NQ here. So the NASDAQ, literally identical, but a little bit stronger, but already getting pretty extreme there from a short-term buyers on the DOC here with the steel almost above the 13.5. So pretty quick to get that far overdone. It's going to take midterm, long-term buyers to really kind of hold that situation up, and we're right at that critical meeting point of cyan green. So this will be an interesting one. We won't know. Potentially, it could happen later today because obviously the day hasn't even begun. We're already on the plus side. Right now, we could get the crossover, and that would be enough to pick over shorts. And you can see there's just been a huge drop off, and then just that was short covering that just took place, and they've been fading off once we get to the bottom peak there. So it wasn't a surprise that they were able to push it back above. From a treasury standpoint, now we're getting into some extremes. So the expectation from bond traders is that rates are going to continue to rise. That's a significant one because now we're getting into pretty steep territory. So that really puts a lot of pressure on the market because it becomes very attractive to be in treasuries when your yield is significant, that you can lock in pretty decent rate of return without exposure to market gyrations. It becomes an attractive counterplay, and so that puts pressure on money to want to flow there. Theoretically, there should be a lot of pressure too on a lot of currencies around the world, simply because it becomes a much more attractive place to be in the dollar than it does anything else. So that's worth consideration. Oil still holding above that 80 range, and as long as it stays in that 80 handle right there, it's going to be problematic going forward. Because it puts upward pressure on price and also drains purchasing power uh, from average individuals, not so much, but that just gets passed on in higher prices because that commodity is used so much, and that's why we pay attention to it, because it really does have an impact. Now, it doesn't always happen immediately, but it certainly is something to look forward in time, and that's what the market is doing anyway. So um, you kind of get an idea of where things are going to, be pressurized as we move into the fall. And I think that's worth noting because there's still plenty of other worrying spots around the world that can trigger also additional events and then push oil back over the 100 mark. Would be again kind of a catastrophic thing, particularly given the balance of things as they are right now. Though it would leave the Fed quite a bit of range given what they've been doing with rates from a normalization standpoint. So from a euro standpoint, the fact that it's holding up as well as it is just is that strong infusion from the Fed. There's just no reason to be in the euro given what we're seeing from treasuries in that just wanting to attract capital flight. So it's one of those where eventually people are just going to be moving their money out. It's already happened. We already saw the uh, last quarter, a lot of European money moved into America, and that for that guaranteed yield from a gold standpoint. We expected a pop back up. This was pretty extreme from a DOC standpoint. When the red DOC gets below that 23 level, we look for some type of pop back up. Now, not going to help even if you get the orange dip below. You're going to have to pop up, and we'll see it come back again. But it's first time not seeing the dip below the red line. So it's going to take a little bit for it to build up, but that would be the start. Bitcoin, of course, hanging way down below here. underneath 23%, caught midway between the 0 and 23, and still uh, MBI white, even though it's leading, fading, but just getting no interest whatsoever in any new buys at this particular stage. And from an ETH, it's holding up a little bit better, but it had a much larger drop. So the fact that it created the new lows is about equivalent to the same that Bitcoin is, relatively speaking, but also a bit weaker than Bitcoin from that standpoint. So when we look at the 50K, we can see we had the slight downturn and then the turnaround buy once the MBI magenta right there crossed over. Boom, that created the instant buy, and right about that bar there on the open at the 43.80, and it's been nonstop since then. So pretty clean from that standpoint. We look at it post market right now. Here's what we're looking at in the pre market. This press up right now, you can see positive extreme all the way from that breakout, and it's about 44.09 range. And it's typical when we get above that 4,000 to make it into the 23 to 35 range. So from an intraday standpoint, you can see we started off with weakness, and then middle of the day there, all those dips below the orange below the red DOC, and then we had the crossover, and that took place right around the 23%, and it's been straight up from there for most of the day. And so that was pretty clean action overall, and we're getting a continuation of it today. And it's just a question of how much of free cash they have to continue the move. And if there's a significant interest in it, I just think that there's going to be a heavy draw elsewhere. And once momentum fades, I think it'll be interesting to see if we end up with more sellers going into that to take any short-term gains and then just rinse and repeat. Trying to look for discount and really trying to determine whether or not things are going to get additionally soft in the economy. But this has been everyone's been talking gloom and doom for quite a while. I haven't been on that scenario. I think there are trouble signs, but usually that's that grind higher when there's fear, because it's easy to take advantage of people who are tepid and going into the short category, and then they get pounced on. We had clean readings for the short, leading up to this point, but you definitely could see the turnaround taking place. So that's the long and the short of it for now. As always, though, I'll continue to put updates on the Skype chat as relevant. We'll talk to you later. Have a good one.